So how can we earn passive income on our cryptocurrency assets? That's what I'll be covering in today's video. So we have this wallet right here, and look, it's a pretty big wallet, but they're earning income on their cryptocurrency assets. And since deploying less than a week ago, they are already outperforming if they were just holding on their assets in the market. But how exactly are they doing this? Well, they're providing liquidity to decentralized exchanges in the form of liquidity pools. So for example, they're providing liquidity to a wrapped Ethereum to Uni liquidity pool. But if you're wondering how exactly this works and how exactly you can take advantage of this business model, I'll show you. So for example, if someone goes to Uniswap or a decentralized exchange and wants to swap their Ethereum for an asset such as Uni, look, say they want to swap 3 Ethereum. They're going to have to pay a fee. In this case, it would be a $14 fee. But what's cool is that a percentage of this fee gets paid out to the liquidity providers who are providing the decentralized exchange with liquidity in the first place. So if you put up your cryptocurrency assets to a decentralized exchange like this, and you provide liquidity, you can be paid when traders are swapping one asset for another. Now, of course, there are risks to this investing, such as divergence loss. I'm not a financial advisor, do your own research. But anyways, you're probably wondering how we can find these opportunities in the first place. Well, you can go to Uniswap, go to the pool section, view positions, and you can start scrolling through, see some opportunities. But there's a problem with doing so. As you're scrolling through these pools, you can't see too much information about the assets. For example, if we click on Pepe to Ethereum, you can't see how correlated the assets are to each other. This is very important to know. You also can't see things such as detailed volume history, which is another very important factor to know when evaluating how consistent or stable a pool is. So that's where Metrics Finance comes in. It's the best software for finding these liquidity provision opportunities, and then also simulating your positions to see what type of returns you could be making. And then third, building out your portfolio. So I'll go ahead and launch the app, and I'll leave a link in the description where you can claim a trial to the pro version so you can try it out on your own. Anyways, I'll go to the Discover section at the top, and here we can start searching for opportunities. So we can go to Select Exchange. I'll go ahead and select all of them, and then I'll unselect the ones I don't want to look through. So I'll have these selected. And then for networks, I can select Ethereum, Arbitrum, Optimism, Polygon, Solana, and then I'll go Base. Now here, we have over 2,600 pools to sort through. That's a lot. So let's filter out the ones we don't want to look at. So I want to look at some pools that have solid APR. We're not looking to get 1, 2, or 3%. So let's go ahead and go with at least 15% APR. And then TVL. I want to find pools with solid amounts of TVL. So let's go with at least 3.5 million bucks in TVL. And then let's go to average daily fees. I don't want to look at pools that just have $1,000 or $2,000 in average daily fees, because that isn't too much money being paid out to liquidity providers per day. Let's look at pools like 4,000 bucks in average daily fees. Here we go. So now we're down to 57 pools. Now we have a lot less pools to sort through. And although it says 57 pools in total, in reality it's less because some of these pools are going to be meme coin pools. Like I'm not even going to be paying attention to MAGA47 to wrapped ETH or Pengu to wrapped ETH or wrapped ETH to XMS, etc. What I am going to pay attention to is pools like wrapped Ethereum to USDC, USDT to wrapped Ethereum, etc. So we can start scrolling through looking at these opportunities. So I see wrapped ETH to Link here showing about 61% APR with 60 million bucks in TVL. We can go ahead and simulate that in a new tab. And now we can go to deposit amount, enter our sample deposit amount for the simulation. Scroll down, we can see some very important information about the pool, such as correlation. We can see how correlated these assets are to each other. You can see they have about 91% correlation. You can also see volume history, the fees per day, volume per day, see how consistent the pool is over time. And then you can also go ahead and find your range. This is important. And if you're excited for me to show you how you can earn income on your cryptocurrency assets, make sure to subscribe and hit the bell so you don't miss an upload. So now we can select our price point at what price points we want to provide liquidity for. So if we go with something like, let's just say 120 to 169, we're looking at about 62% APR. And we can also see our estimated yearly earnings, monthly earnings, and daily earnings. And this current simulation is based on the past 30 days of data labeled here. But we can change it to look at, for example, the last 50 days of data. And when we change this 50 days of data, it also shows the last 50 days of volume history and pool price history. So we can zoom out and have a better bird's eye view. And then to try to get a more accurate simulation, we can always zoom back in to the last 20 days, 10 days, or 15 days, whatever that number may be. So I'll leave it at about 20 days for now. And then if you're unfamiliar with a cryptocurrency asset, for example, if you don't know much about Link, you can always copy it, go into CoinGecko, paste it in, and then read about Link and see the role it plays in the DeFi ecosystem. From here, you can decide whether or not you'd want to enter this position, wrapped ETH to Link. And if you want to save it for later and maybe enter it, you can go to Save to Portfolio in the top right and save it for later. Then we can go back, we can start scrolling through more positions. I see this one, wrapped ETH to MKR, showing about 68% APR, pretty high. Let's go to simulate here. First thing I like to do is look at the correlation. So these assets are showing very low correlation. 29% is low. So I'm immediately going to close out. I'm not interested in taking an exposure to this one. We can look at SOL to USDC. I'm seeing a high APR and I'm also familiar with this pool. So we can go to simulate and then scroll down. Now it's going to show low correlation for this pool because these assets shouldn't be correlated. Think about it. USDC is a stable coin. It shouldn't move, and Solana moves. So if Solana goes up, USDC wouldn't be going up. So anyways, we can type in our sample deposit amount and then find a price range at which points we want to provide liquidity. So if we go with let's just say 112 for min price, and then we can raise this to about 183, we're looking at about 113% APR. Now I'm actually entered in this position, and if you stay around, I'll show you my position's performance so far. But before we get to that, we can take a look at this pool more. We can look at the volume history. You can see the volume per day, the fees per day. I personally wouldn't want to invest in a pool that has some days super high volume and then some days super low volume and fees. I like consistency. And here we can see there's solid consistency. Yeah, some days are higher and lower, but we're not seeing any days of sub 5K a day in fees or sub 10K a day in fees. We can even zoom out to the past 100-day calculation range to see more information. Obviously here we had a big spike in January when Trump launched the meme coin. Other than that, it's pretty solid. If you go to the tracking feature in the top right, you can paste in your wallet, see your pool's performance. So I'm in the SOL to USDC position. Although it is at a $5.36 loss, you can see that if I was holding on to my assets in the market, I would be down much more. So I'm still up 11 bucks compared to if I were just holding on to my assets in the market. And my position is estimated to get about 48-49% APR at the moment. But anyways, you can scroll through, find other opportunities. Like we have the wrapped ETH to Uni. Go ahead and simulate it here. Then we're going to run through and do the same thing for many pools. Find a solid price range, solid calculation range to simulate with. And then once you've done some simulations, see what pools look enticing to you, which ones have correlation that you think looks good, etc. You can go ahead and save them to your portfolio for later. Again, you can go ahead and click the link in the description down below to claim a trial to the pro version of Metrics Finance. Go ahead and do that and subscribe. I'll see you in the next one.